The Finance Minister tries to fast-track Financial Action Task Force compliance bill to avoid 30% deduction on every money transfer. In presenting the bill as Parliament resumed after the August break, he stressed compliance with the FATF agreement is of urgent importance. However, the opposition said they can't support the bill because it compromises the public's privacy and gives the minister too much power. Melissa Dasrath has more.
Finance Minister Imbert is warning that citizens could face a 30% deduction from all wire transfers from TNT to the U.S. That is, if the Tax, Information and Exchange Bill is not passed.
As a first step, they will deduct tax from any money transfer coming out of Trinidad and Tobago going into the United States, because they will not be able to distinguish whether it is a payment for goods and services or whether it is a remittance of profits or dividends or income from activities in Trinidad and Tobago. So the United States banks will now automatically deduct 30%.
Trinidad and Tobago has been grey-listed for non-compliance with the Global Financial Action Task Force since 2011. The next stage, Minister Imbert warned, is being cut off from doing any business with American banks, like in the case of Belize.
Stage 2 will be they will disconnect us from banks, they will shut down the credit card system in Trinidad and Tobago, and they will shut down commerce in Trinidad and Tobago. That's stage 2.
The tax bill seeks to implement the regulations of the FATF agreement into domestic law. It will open the door for sharing personal financial information from Inland Revenue, banks, insurance companies, and other financial institutions. But since it attempts to breach privacy rights, it must be passed by a 3/5 majority in the Parliament. However, Opposition Leader Kamala Persad-Bissessar said she cannot support the bill as is because it is overreaching and there is a complete secrecy override. Further, she said it deviated dramatically from the 1989 legislation and allows for the minister to supersede the role of the Inland Revenue and leaves the citizen without recourse.
Any power under subsection 1 is exercisable, and that's the power now that the minister has. Notwithstanding, listen to this very carefully, notwithstanding that the circumstances, if any, necessary under that act for the exercise of the power may not have arisen. Wow. So the conditions are not there to exercise the power, but here, notwithstanding that minister has the power. Now this takes away all recourse that an aggrieved person may have for judicial review of the ministerial action.
Parliament was adjourned until Wednesday, when the bill is expected to come up again for debate. Melissa Dasrath for C News.